Now, if you would like to construct your symmetrical chart pattern, you need to understand that you need to zoom out your chart. Zooming out your chart will help you to be able to construct your triangles. Now, I am going to repeat the triangles formation pattern again. Now, if you'd like to construct your descending triangle, first thing you must see that your horizontal line is parallel. Then you have your descending triangle slanting all the way down. Now, in this case right now, we are constructing what we call the descending triangle. Here comes a descending triangle. Now, in a situation whereby your horizontal line is slightly slanting upward or downward, you don't have an ascending or descending again. You have a different pattern. So once your horizontal line is straight, you said
the screen is not showing again.
I think you have to check your network. If you can't see my screen, check your network. Check your network. Check your network.
Let me rejoin again, sir.
Aha.
Yes, sir.
So this is what we called a descending triangle. You can see the horizontal line is parallel. It should be parallel to angle 180 degree. 180 degree. Can you see the screen now?
Yes, sir.
Aha. So this angle 180 degree. There are different tools you can use from the left section right here to know if your line is parallel to 180 degree. So let's check our geometrical section right here. Okay, I think this is not a section. I'm trying to look at the triangle tools. There's a particular tools you can use to check your line if it is okay. Let's check out this triangle right here now. Okay, not this one. I want to find out a particular tools you can use to construct the right triangle formation. I do have it at the bottom before. All right, there's this particular tool you can use. When you use this tool, well, let's forget about that. Just make sure this line right here is straight. It's not slanting upward or downward. If it is slant upward, then that is a symmetrical chart pattern. If it slants downward, then it is now a wedge. Now, if you have your triangle like this, then what we have now is ascending triangle. You can see the line at the top has to be straight.
Okay.
It has to be 180 degree. That was the reason I was trying to find out that triangle too, which I was unable to find. Now, if it slopes all the way down like this, then it's a different degree. So let's see. I think we should be able to see these tools. I want to use this tool to demonstrate. We need to demonstrate this thing so that you can easily understand this concept of your triangle. These tools should be in this section here, but I'm not getting the stuff here. Let's try to see. Yeah, it's under this section. Is it under here? Let's see if we can get this. If we can't get it, well, we proceed further. If you can't get it, we proceed further. But it would be nice if we can get this try. I do use this. Okay, I do use these tools. Do use this tool. This is not the tools right here, but just understand what I'm saying right here is based on what we have right here, this line, and this line, they have to be straight. Now, you have done what we called, I don't know if you have done that when you were in school. We have a kind of line like this, whereby we say, okay, from this section is 90 degree. From this
Okay.
section is another 90 degree. If you have done it, if you are a good mathematician, or if you still remember in school mathematics or geometry, if you're a science student or engineering student, you can see. So when you combine all these 90 degree together in 4 places, you have 360. So a circle has 360 degree. When you divide this circle into 4 places, then each of it will be 90 degree. Now, based on what we have right here, if we keep on shifting this line right here, the degree at this zone right here will keep on increasing. If you push it all the way down, it decreases. If you push it up, it increases. Now, when you push this line right here, you put it to be vertical, then you have 90 degree. When you push it all the way right here, then it's 60 degree. So that was the tool I was trying to find right here, which I couldn't find. That would have been the best way for us to explain these concepts. Or unfortunately, I don't know, maybe an upgrade. Okay, I think I found it. This is it right here. I found it. This is it. Let me just remove this one right here. I found the tool. Now this is the tool. Now you can see that. So let me just make it to straight. You can see now this is 0 degree. Now if I move it all the way down, you can see it's going to be 90. If it's parallel, you can see 90. You can see 90 degree. Now if I move it again to the left hand side to be parallel, you can see that is what, 180 degree. If I move it all the way to be parallel at the top, that is 90 degrees. So everything I was saying right here, now we have the two. Now let me just remove.
What
Let
is
me
the name of the tool, sir?
yes, you will find these two under trend, under lines, that is trend angle. Yes, I was looking for trend angles, so I'm very happy we were able to get it. So I have to remove this other one which was confusing. Let me remove the other one which was confusing. I think this one should be the triangle. So let me just remove the triangle. I don't need the triangle. We just need the trend. Have you gotten it from your side?
Yes, sir.
Okay. So that is the tool we need. Once we have that tool, I'm trying to remove this one as well because I don't need that one. Let me see. Okay. We need this one. All right. You can see. Let's try it again. You can see how it rose.
Yes,
If
sir.
we start from this 0, which is 0, if we take it backwards, that is minus, because we are going clockwise. If we go from this vertical all the way to the right, positive. When we get to this parallel zone, it turns to minus. So you don't need to stress yourself about that minus and plus. Just know that when you rally round, it's 360. Now if we want to construct our trend line, our triangular formation, you need to know, okay, when we compare it this way, now let's put our vertical line to be parallel here. Can see that? Can see the angle, the degree from this level is 145. If we put it from the top, the degree from this zone to this horizontal point is 135. Now let's see a situation whereby we have an angle like this, and then we have another angle like this. You can see that this line is not parallel, so we have something like this. This is a symmetrical chart pattern. Symmetrical chart pattern. You have something like this. This is a narrow wedge, a bullish wedge. So you need to understand the difference right here. So you don't need to stress yourself about everything we are doing right here. I'm just trying to make sure you understand. A parallel line like this, you know, okay, anything that goes rising up, descending, if it comes under, ascending. Now, if this trend line is not parallel, if it goes up, points up, and then another one join it at the top, then you know this is a wedge. If it comes like this, it's also something like a wedge. A wedge will point its nose upward. So you need to know the difference, whereby a symmetrical, the nose will be at the center. The nose will be at the center. So how can you know the nose? The nose will be parallel. Now you check the nose right here, you can see this line right here. You can see the nose is parallel to this straight line. You can see that. But in the case of the wedge, you can see that the nose is what? Is rising upward. So that is it. Now, if you want to construct these things, there are rules. Now, for you to construct chart pattern, you need to understand the rules attached to trend line. Now, we have trend line, which can go up, and we have trend line, which can go down. Now, for us to construct trend line, you don't just connect any point on the chart and say, oh, this is trend line. But that is the mistake majority new traders make. They just go on their chart and then construct any line together, and they say, oh, I've constructed a trend line. No, you can't just say, oh, like this is a trend line. You are wrong. Now, for you to construct a trend line, I do advise traders to start from the front all the way back. Normally, if you want to construct your trend line, some traders would rather go and construct their trend line like this. For example, let's say, for example, you want to construct trend line right there. Some trader will start their trend line from this level and then do it all the way front. It is wrong. You connect your trend line from the front all the way back. Then you do the extension from the forward. This is not a trend line. This is just a line. Why is this not a trend line? For you to trade trend line, you need at least 3 successive touches. 1, 2, 3. Price has to go like this, come back like this, goes like this, come back like this, goes like this. Now, when price goes up, you have to see minimum of 2 breakout structure. Now, price rally from this level, you connected it here, you connected it here. Now you have the first breakout structure, you have the second breakout structure. When you have 2 breakout structure, then you have a defined trend line. Now in this market right here, from your test 1 and your test 2, you only have 1 breakout structure, so there is no trend line active right here. I will show you again. From here to here, you connect your trend line. You don't connect your trend line right like this. It is wrong. You connect it from the forward all the way back. Now the reason why you are connecting from the forward is you want to stay closer to current market price. Where is the current market price? This is the current market price. So if you are connecting your trend line from the left hand side to the right hand side, it is wrong. It is wrong because you are not considering the CMP, that is the current market price. You are considering instead you are considering the past market price, which is the PMP, which shouldn't be so. You don't put into consideration or start from the PMP, past market price or previous market price. You start from the current market price. So you connect your trend line from the current market price all the way back to past or previous market price. So in this market right here, the PMP, which is the past market price or previous market price, this is the previous swing or past market swing, and the right here and the right here. Whereas this zone right here is the current market price. So you don't connect from the past, you connect from the previous market price, which is closest to the current market price, which is CMP. Out of all these swings right here, we have one swing right here, we have one right here, we have one right here. Out of all these swings, which one is closer to the current market price right here? This is the one closest. So the closest one right here is where we start our trend line. Then we connect it all the way backward. Now when we connect it to the backward, we connect it all the way down. Now based on what we have right here, we were able to connect two successive lows. We couldn't see three successive lows. For the fact we were unable to see three successive lows as we constructed our trend line all the way back, then it means we don't have a trend line right. By definition, a trend line is a straight line showing the direction of trend. Now, what is a trend? For a trend to be defined, we need to have what? Let's check it out. We need to have 1, 2, 3. 1, 2, 3. Now let's repeat that again.
Your alarm for 1:23 a.m. later.
1, 2, 3. From this low to this low to this low. 1, 2, 3. We have first breakout structure, then second breakout structure. Now based on what we have right here, we are seeing a new trend, which is a bullish trend. Now if you are constructing your trend line like this, you construct this
Okay.
with this.
Web for we have force of structure.
Oh my god,
Based on
it's nonsense. Now if you construct your trend line from here with this low and you say this is a trend line, this is not a trend line, this is an ordinary line because you only have first break here. This break here does not mean the trend is going upward. Market can still come back and push all the way down, which means we can have something like this, up, like this, then like this, all the way down. So before we can say we have a trend line, we need to have two breakout structure. One, this is the first break, and this is the second break. 1, 2. Now we connect this trend line all the way from the last PMP and backward. You can see that. When we connect that, then we can say yes and take note. Price must touch this trend line right here. You can see that. You can see this. You can see this. So in a situation whereby we have something like this, whereby we have this like this, and then you now say, oh, I connect this low to this low. You now say that this is a trend line. It's not a trend line, no. This is just a straight line. A straight line is different from a trend line. A trend line shows the formation of a direction, while a straight line is just a line connecting 2 points. Now a straight line is a line connecting 2 points. That is a line, where a trend line is a line connecting 3 points. So most times traders don't know the definition of trend line. If you are using a trend line and you cannot find at least 3 points, then you are trading just a line and not a trend line. And this is why most traders they fail woefully when using trend line concept, because they failed to understand what trend line it's all about. So now for you to be able to use chart patterns, especially the triangle formations, you need to understand this concept which I've shown you today.
Yes, sir.
Now let's check what we have right here on this price chart. if you see what we have right here, we have one swing here, another swing right here, another swing right here. So if we connect this swing right here all the way forward, we can say, okay, we have a trend here. So there's a trend right here. Now let's see, we have the first level right here, which is like a small break, and we have another swing right here, which is another small break. You can see that. You can see how it breaks all the way down. So based on here, we connect this line all the way backward, and then we connect another level at the top. So right here we can say we have a reverse triangle, a reverse. This is another pattern which you might not have been taught. This is like a megaphone, but it's not like a megaphone. Megaphone looks like this. A megaphone looks like this. It's a reverse symmetrical triangular formation. That is a megaphone. It's a reverse symmetrical, right? Now, but this also belongs to this version. So that is it. Can see that? Now let's go for another example of the series you've been taught. Now, based on what we have right here, if I would connect my trend line, I can connect from this low here all the way to the back here, and I extend it all the way forward. You can see. Now we have another touches right here all the way back, all the way right here. You can see that all the way. We have something like we have first one right here. We have a break here. We have a break here. Now market went all the way up. We have another slight break here. You can see. So we have 1, 2, first break, second break of structure. Now the third right here, we couldn't have a break. Market came all the way down. So this kind of a very choppy market. So let's check another example. Let's go to the 1 hour chart. Let's go to another time frame or another currency pair. Let's go to another currency pair. Okay, let's check this one right here. Now,
Yes.
low, low, low. We connect all these lows together. We have a top here. So we have our trend line. Now we have, you can see the way I connect my trend line. I start from the front. I didn't start from the back.
Yes.
So we have this all the way forward, and then we have this like this. You can see that. You can see an ascending triangular formation. You can see how it's led to the continuation of this market. You can see that. That is that. Let's check AUD USD. AUD USD, we don't have any pattern here in relation to trend triangle, right? So this, no. AUD New Zealand, we have one here. Now we have from this low all the way up, plot it down. Now we have these lows and this low. Now this is an example of the falling wedge I showed you. This is also a triangle, but it's a falling wedge. We call it falling wedge. You can see its nose is pointing down. As the nose points up, what happened? The market continue all the way up. You can see that. So that is gone. It is gone. It is gone. Now let's look for another example. All right. Based on what we have, okay, let me just hang on. I need to put down something.
Yes.
Hang on. So let's check gold. Now, based on gold, you can see we have series of lows under, lows under, lows under. So let's see if we can connect all these lows from here all the way back. We extend it all the way forward. All right. Now we are having a rising trend line. Now from this level here, we're struggling to break above that resistance. You can see that. So market is still flowing based on that. You can see that. So
Yes, sir.
you can see how we are able to connect our what? Our ascending triangle. So if the market should come back all the way into this, I need to remove this. Some of these tools right here, I necessarily don't need them. Just give me a few minutes. Let me remove some tools here which I don't need. Okay, just give me a few seconds. I tend to teach different students with different tools. Just check it out. The part tools, the way these platforms settings has been changed, it has really affected it has really affected the mode of using tools. Okay, all right, so now we are looking for price to come all the way here and continue all the way to break out, then maybe come here and continue all the way. So this is a projection of our ascending triangular formation. You can see that. So this is what we have on gold. You can see we constructed this sharp pattern from the 1 hour chart. It means this could lead gold to bullish run if it eventually break out of this pattern. If it doesn't break out, then it means this pattern could still play out like this, come here, see go like this, then come here, then break like this. You can see now we are having what? An ascending triangular formation under gold. You can see that.
Yes, sir.
So do you understand
Yes,
this class?
yes, sir.
Good. So any other question? Now let's
No,
look
sir.
for a downtrend, a descending triangular formation. Descending let's zoom out. We are looking for descending. This is an uptrend. We will never see a descending. Descending. You can, the fastest way to look out for descending triangular pattern is to look out for market in a downtrend
Yes, sir.
or market at a resistance. Because, for example, right here now, there's one we add right here, but it's an advanced one. You can see it here. When I say advanced, it means the base is having some false move breakout. You can see how price broke this level. You may find this confusing, but it's a descending. You can see how price eventually continue all the way down. You can see that.
Yes.
So it's a descending. You can see after this bullish rally, the descent triangular led to the continuation of the downtrend. can see that. So let's look for another example. Let's go to Swiss yen. Let's go to Euro GBP. This pattern right here has been voided, because if you check from right here all the way down, it has been voided. We could have said, oh, this is like a descent. No, it has been voided, so we can never use it. We only add ascending right here. This is not a descending, it has been voided. So we move on to check for another examples. Let's check the one on Euro USD. Maybe say active. From this level, no, we cannot construct anything right here. So do you have any example you would like us to check?
Yes, sir.
All right, so let's check this one out. From this level, we fired it all the way back like this. All right, this is still like a what? A falling wedge. You can see it's like a falling wedge. It's like it's a triangle sloping out its nose downward. So we cannot use that one. Let's look for more example. Another more example. No. No. Let's look for another one. I told you in a downtrend. This is a downtrend. No, we can't see. Okay. New Zealand, Canada. Let's look for this downtrend. Maybe we can see one. Okay, we have one here, but it's going to be obvious on the lower time frame. You can see that. You can see that.
Yes, sir.
You can see how it's led to more downtrend. You can see more downtrend. Now we have another one here again. But now I told you, I said in a downtrend, that is where you tend to find them. They are continuation patterns. Connect this all the way up. Now the lows. This is the low. This one here was a force. Now let's imagine maybe you don't want to use that one. Maybe use this one here. Now what can you notice we add? We have in this zone. You can see we have another inner triangle, descending triangle in a bigger one. You can see we have one here.
Yes.
Now we have this small one inside this bigger one. You can see that. You can see how it led to more downtrend. So your descending triangular formation is mutually for continuation and ascending continuation of a downtrend, and ascending triangle for continuation of a bullish trend. So it is majorly used for continuation, while symmetrical means bilateral. The symmetrical pattern, which is like this, means price can either break up or break down. So whenever you see a chart pattern like this, it is what we call symmetrical. It is different from a rising wedge. You know, a rising wedge will have its nose, both nose pointing upward. You can see this is different. And then this one too. This one too is different. So don't mix them up. Oh. You can see they are both. This one nose is pointing down. You can see the nose is pointing down. Well, and this one nose is pointing up. You can see whereby this one, the nose is what? Is horizontal, parallel to this one and to this one. You can see that. So don't mix them up. Oh. So this one here, whereby we have the trend pointing all the way down and the trend under pointing all the way up, whereby they form an apex. which is parallel, horizontal, is what we call symmetrical. So when you see this type of pattern, it means price can either break to the upside or price can either break to the downside. So how can you trade this pattern? The best way to trade this pattern as a beginner is to trade it for continuation. If market is going up like this and the market now forms something like this, see that you look out for the break to the upside. All right. If it breaks to the downside, I would advise you don't take it as a beginner, because most time price can come and break all the way down and then turn into advanced market structure, which you are yet to get to that class. After your 4 years after your 4 month program, it is advisable you continue for the advanced class, because there's something we have like this, whereby once the market moves like this, it moves like this, and then market breaks down, people believe it's going down. Instead, market does what? Use this level right here as inducement liquidity, then come right here and come down. Sometimes it won't come down like this, it goes more up and do what we call re-engineered market liquidity, then comes all the way down. So these are some of the patterns we discussed in our advanced section. So these are more complex. All right. So so now, in a safer way for you as a beginner, don't ever trade the breakout, because most time when you take the breakout, it may usually lead to a trap, or you may be induced or used as liquidity. So for now, as a beginner, all you have to do is to what is you want to look out for price as it's going up, bullish rally, then you see something like this, all the way like this. You don't ever take its breakdown. Instead, look to take the breakout to the upside to continue the market all the way upside. Another way is when the market break up, you may look for retracement into this zone before you enter. But it all depends on what price offer you at this point of breakout. If it is a strong breakout, price may not retrace. A stop loss may be good right here, and then your TP1 may be okay here, and then you target times 2 or 3 of the measurement of this X to Y, which is what we call the MOBJ, measurement objective. All right. Now, what I mean as measurement objective is when you are trading these patterns, how can you know the next point the market will stop, whereby the pattern will become weak or unable to push the market more upward? That is what we call measurement objective. Now, you all know symmetrical is either it breaks up or to the downside. And I said in a bullish market, take the break to the upside. Whereas in a downtrend, whereby you have a symmetrical sharp pattern like this in a downtrend, which means the market is coming like this, coming like this, coming like this, then suddenly we have something like this, like this, like this. Only take to the downside. All right. If you are looking to take to the upside, market may use you as an inducement here, then continue all the way down. What happens right here is a concept we discuss under the advanced, which is called buy side liquidity. Sell side liquidity is all under liquidity. All right. So market will use this as B, use this as protected I, then reverse as it is going all the way down. But for now, as a beginner, what you need to do is when you have the market going down like this, going down like this, and then you'll find a pattern which is symmetrical sharp patterns in this downtrend, only look to trade the breakout to the downside. Alternatively, you wait for a pushback to convert to validate, then you look out for more sell to the downside. So that is symmetrical chart pattern. Is this clear?
Yes, sir.
Now, let's see how we can define our measurement objective. Now, let's take for instance, we are in a market whereby we have our chart pattern forming like this. Now we have this pattern right here, And based on what we said this is an ascending triangular formation. Now, in the situation whereby market goes into this pattern and then we have something like this, all the way, and price breaks out. How can we know the potential price movement of this breakout, where it would get to before it reverses? Now, you can take the measurement from the first touch of this level all the way down to check, or there's no any strict rules right here. Some we measure from the top to the down, while some we measure from the bottom to the top. This is just an objective. It's not a precise measurement, just for you to have an idea. So now what you're going to do is you study this pattern based on what we have right here. You see this pattern moves in this image before it breaks out. Now we want to start our measurement from the inception, from the start of this pattern. This pattern started from this level, as it bounce off here, comes right here. So we take the measurement from this leg 1 to the leg 2. Now, in a situation whereby you cannot have leg 2, when I say you cannot have leg 2, let's say for instance market didn't test this high, instead it stopped right here, and this is the only one you have, so you will never take this one. You take this one as your 1 and then this as your 2. You must see price testing the trend line and the horizontal line. So in a situation whereby this level tests this horizontal line, then it means you start your 1 and then end your 2 here. Do you understand that?
Yes, sir.
Now, if the market should test this level, that means we count from year to year. If the market doesn't test this level, maybe the market start from here, get here, and they come back, and then we're able to connect these highs and highs. We are unable to connect these highs. It means what we need to do is that we need to start our counting from the higher low here to the peak of this level here. Now, which means we measure the distance from this level 1 all the way up to this level 2. Now let's reverse this again. Now let's say for instance the market tests this level here. It means we have to consider this 1 and 2. It means we measure from this level 1 all the way 2. Now you can see from this levels down to this peak we have 40 pips. Now let's say for instance the market didn't get to this peak. Instead the measurement start from this level here and they'll tag this level. It means we measure from this level 1 all the way here. That is 31 pips. You can see the difference. So now let's say for instance your measurement start from this level and this level. That is 31. It means you extend your 31 from the point of the breakout here, from the point of breakout right there. You extend your 31 pips from here. You count 31. That is it. Now let's say for instance the market tag this level here. It means we are going to measure from this level to this level. So if we measure from this level to this level, it means that is 40. That means we have to look out for what? For 40 from the point of breakout. So let's go to 40. So it means it's 40. So your 40 here will be your TP1. Your TP1. Now, for you to consider your TP2, you zoom out, look out for possible previous resistance on the price. Maybe there's a resistance right here in before market push all the way down here. Then you know, okay, a resistance is here. So it means your TP2 would be this your TP1. This your TP1. It means your TP2 will be around this zone as your TP2. Maybe your TP2 or your TP3. Do you understand that?
Yes, sir.
So
Yes.
what do you use to calculate your pips, sir?
Okay, what I used to measure the pips, right?
Yes, sir.
Now look at these two here. Now these two right here, you get it, is what we call the price range. You move your cursor to the left side of your trading view, count 1, 2, 3, 4, 5. On the 5 section, you click on the arrow right here. Then you move your cursor all the way down. You go under the measurer and then pick the price range or favorite the price range. When you favorite it, you have it on your chart. at the bottom of your list. If you don't favorite it, you have to pick it here one by one, but it's better for you to favorite it. So when you favorite it, it has a yellow star. It means you've added it to your list of favorite tools. Now you click it right there, you measure the way up or you measure the way down. It shows you the number of pips without using your risk to reward calculator like this. Can see that without using this tool. Can see that. So that is another fast way to measure pips. Is that clear?
Yes, sir.
So now for the downtrend, let's see how we measure from the descending triangular formation. For the descending triangular formation, we have something like this. And we have our trend line at the top like this. Now, let's say for instance, the market was coming all the way from the down, and they get here, we have it like this, like this, like this, like this, like this, then breakdown. Take the break to the downside, right? It breaks down. How can we know where price is going? What we need to do is to measure from this entrance of this line to this level where the market came in. Some will tell you, oh no, let's measure from this level to this level. Now there's no any strict rules. That's why it's just an objective, right? So now if you measure from this level to this level, it means you measure from here all the way down. Why some will say, okay, let's measure from here to this level, but I'm not in support of from here to this level. I will tell you the reason. If you are measuring from here to here, you are measuring all the way up, and this pattern is used for selling. So if we are going to sell, then it is better we measure in direction of where the pattern is showing us or telling us this is going. Now, how to measure in direction of where the pattern is saying is for us to push or to measure from this here to this here, because we are going down, where price is going down, so we need to measure from here to here. That means we have to measure from here all the way down, which is 42 pips, instead of measuring from here all the way up. If you measure from down to the up, you get the same range. But if you are selling, your measurement should be in minus. It should be negative, not positive. If you are buying, just like what we did right there, our measurement should be positive. If we are selling, our measurement should be negative. And how can we get negative? We take our measurement from the top all the way down to get negative. You can see right here we have minus 42. Now what we need to do is to replicate our minus 42 from the point of breakout all the way down minus 42. You can see that. So it means TP1 will be around this zone. So it doesn't make sense for us to measure from this level as plus 42. Then we now start saying from this level minus 41. We are not in alignment. We have to measure in direction of where the pattern is pointing out to. All right. Now let's reverse the case again. Let's say for instance, as the market came all the way up, as the market pushed all the way up, we discovered the market didn't touch this level. Instead, it stopped right there. Then it now tests this level before it come down. Where are we going to monitor? Measure rather. Now for us to take measurement, some will tell you measure from year to year. If you do that, I told you, you are measuring buy, which is not right, because we are looking for sell. Instead of looking for measuring from the bottom to the top, which is wrong because this pattern is telling us to sell. Instead, we have to focus from right here all the way down, which is 30. If you are measuring from this level to the upside, you are getting 30. But the best way to make things as a professional way point of view is to measure from the top to the down, which is 30. So which means we now extend our 30 pips, which is negative, all the way from point of breakout all the way down. You can see that. So that is it. So is that clear? And then if this bullish swing test this level, then it means we measure from this top here all the way down. So which means we measure from the tip, from the line, from the price which tests the descending or bearish sloping trend line all the way to the horizontal line. So we use this level as a TP1. If you have any potential support level, like example right here, you can say, okay, this will be my TP2, and this will be my TP1. If you have another level right here, you can say, okay, this will be my TP3. As the market keeps on going, then it goes. So that is how we use this pattern. So that is all we have for today. The same thing is applicable to your symmetrical sharp pattern. The symmetrical sharp pattern is the same thing. The difference is just that the pattern is showing you that look out I may either break up or I may either break down. So how can you take the measurement of your symmetrical chart pattern? It is also simple. What you have to do is you have to follow the direction where the market is going. If market is going like this and it's going like this, and you see something like this, goes like this, goes like this, goes like this, goes like this, and breaks out. How can you measure your MOPJ? You measure from this low, the first point, to the top right here. If that is 67, then you replicate your 67 from the point of breakout all the way up. So for your 67. Now the question is, what if this price doesn't get to this upswing right there? Instead, it stop right there, and then this swing right there only touches this zone right there. And let's draw it in a better way. Now let's say, for instance, we have this right here, we have this right here, and as price was coming all the way from this down, we kept on having price going, and then we have something like this. Price didn't get up. Instead, we have something like this. Then goes up right here. We come like this. We navigate, we navigate, we navigate. Then we go all the way up. Now, you cannot measure this level because you're not feeling the pattern. You cannot measure this. Instead, the one you are going to take is this one that fits into the line, and this one right here. You ignore this one right here. You ignore it. Why? Because it doesn't feel the pattern. You only start your measurement from where it feels the pattern. So which means we are not going to measure from right here to here because we are unable to feel the pattern. Instead, we measure from the level, from the price swing which feel the pattern. From the bottom here to this level right here, which is 56 pips, then we extend from this level of breakout 56 pips. All right.
Okay, sir.
So
Sir.
that is it.
Yes, sir. Sir.
Ask a question.
Now, okay. Yes, sir. 52 pips. Then the other number that is 8. What is that number for, sir? Is it the amount you are risking on the market?
Which one? I can't understand you.
Like, you got like 50, like let's say 56 pips. Then after 56 pips, we have point and we have the last number there, which is 8.
I can't see 8 on my chart here. Can you tell me where
Like
you're
the
seeing
last
it?
number, the after the 50 something pips, the last number after the decimal point.
You mean the number after the point?
Yes, sir.
Haven't you been taught pipette? Any figure at the back of your point is pipette. That is 56 pips and 6 pipette. 10 pipettes make 1 pip. So your broker, if your broker gives you points, it means your broker is calculating pipettes in their calculation. So if you cannot see points on your chart, it means your broker is not offering you pipette calculation. It means on this currency pair, we have 1, 2, 3, 4, 5. We have 5 numbers after our decimal. So it means the 5th number is our pipette. If you have only 4 numbers after your decimal, it means all the numbers are starting from pip. So if you have 5 figures or 5 digits after your decimal, that is pipette. So it means the last digit on this price scale right here is a pipette. So that's why you see 56.6. It means the last number after the dot or decimal is your pipette. So if you have 10 pipettes, that is 1 pip.
All right, sir.
So reverse this class. Do you have any other question?
Yes, sir.
Have question?
No, sir.
All right. So the next class, we proceed to the next topic. Right? I'll see you in the next one. So I'll give you an assignment. Go through your chart again and mark a well-defined ascending triangular formation, descending triangular formation, symmetrical chart patterns, and also project the MOBJ based on the series of examples I gave you in this class. I will see you in the next class. Peace.
Thank you, sir.
You're welcome.